Hey guys, what's going on? Sherpa here. We got a breaking news today. This is unfortunate and these aren't fun, but as traders, we have to see the market and what's going on as things are, not as we want them to be. So overnight, a couple things. Futures took a huge dip. Yesterday was a huge sell-off. The market was acting very irrationally. You saw that Amazon was up. Most of the rest of the market was down. There were no real winners. I'm going to take you through the process of how to make money right now. Also, how to kind of bite the bullet, take the unfortunate truth, swallow the medicine, whatever it is that I just don't like the way the market is looking this second. It turned more quickly than I expected. I'm going to go ahead and do what most financial advisors, which I am not, but most portfolio managers don't, which is admit that I was wrong. This hit a little early. This hit a lot earlier. I was expecting this next week ahead of CPI numbers. I'm looking at this in the midterm to long-term economic. It's probably good that we take a lump or two to get this inflation worry / interest rate raise that's likely coming, to kind of absorb that a little bit early. And I'm okay with what's going on, but I'm no longer bullish on the positions that were recommended. I'm getting out. I'm going to try to get out midday, and I want to show you what you can do. So it's ever bullish. It's the ever bullish mission, and ever bullish means you are bullish at all times, even if it means on something that is a negative correlation. So what I mean by that is we're going to make money by going against the market, and we're going to do it using ETFs. So you don't have to have margin, you don't have to borrow money, you don't have to fill out a bunch of forms, okay? So that's what we're doing right now. Let me show you how. Again, if you had limits set, they might have triggered yesterday, so good on you. If you don't have the limits, particularly if you're in a little bit of the more high-tech spaces like the rides or the workhorses, I'm just going to get out. You can always hedge them in multiple ways, but that's another video. I just think it's best to get out right now. We're on a Thursday. We're going into the weekend. There's some really baffling kind of hangovers going on here with negative correlations to the market. I don't like any of that. So straight up, let's do it. I'm bailing and I'm going to flip it. So this isn't helped by the new COVID scare that's coming out. By the way, that just popped into my mind as I got a text message. But here, let's go. We still got to bring the energy, even on down days. And this tip that I'm giving you is going to make you a lot of money, by the way, going forward. And what this is I want you to write down, grab a piece of paper and write down SRTY. This is the 3 times levered negative. Okay, well, I just pulled this up. It's pre-market up 5.7%. So this is a pre-market ProShares Ultra Pro short of the Russell 2000. So the theory here is that when the economy is looking bad or doing bad, it impacts small companies more than large companies. They don't have the money to float over a long period of time. My hair looks like shit. Over a long period of time. Whereas large companies have massive reserves and can borrow from banks for free, as we know. So the easy play here is SRTY. Me and my buddies called this shorty. So it's kind of a slang that we use in trading. Hey, we're going to go shorty. Or hey, you buy that shorty. And this is just betting against the market. And that's never fun. But, you know, objectively, the big banks are doing this to you. Your brokerage firm is doing this to you behind your back rather. And next time your advisor tells you there's nothing you can do except for write it out, ask him why he didn't buy shorty, or whether he cares whether or not you buy shorty, or whether he cares about your return. So shorty, SRTY. You can tell it's early for me, but I'm trying to get this out pre-market. All right, next up, SQQQ. Notice these both start with S's. S on the front of an ETF, often, not always, but often, especially if it's a 4-letter ETF, means short. Sometimes it starts with a D and it means down, and some of them are U and it means up. Lab U, for example, is, lab, biotech, U, up. Okay. All right, this is the pro, so this is up 4%. Okay, this is all pre-market. So pro shares, ultra short, QQQ. What is QQQ? It's the NASDAQ. So in this case, tech is typically the one that's getting hurt. A lot of the NASDAQ companies are overvalued, and we trade on that overvalued because it's the perceived value of what the future holds for a lot of these companies. In this case right now, the future is uncertain, and the pathway is a little bit rocky, and the market is absorbing that with big time volume on the sell side. So let's go ahead and just get on the side of all the sharps here. Okay, you get it. SRTY, shorty, and SQQQ. If you got into a bad time this week, sorry about that. It genuinely does hurt me to know that anybody out there is on the wrong side of a trade. I'm giving you the best stuff I got. Remember, these are all non-discretionary, meaning that ultimately we all do this together. But if you want to text me, you want to call me, and if you're a real OG bull, you know that I'm going to respond quickly, and we'll figure out a way around this. I don't think this is going to last very long, but also, why be gun shy? Let's get out there, and instead of retreating and taking our ball and going home, let's go punch that bully in the face. All right, quick, easy video. Let's go punch that bully in the face. If you need to get in these positions, do it. If you can't because of settlement, it's not bad to sit on the sidelines for 3 or 4 days anyway, especially with the weekend coming up. And let's get out there and get it. And it's still AFG. It's still LGR. It's LFG right now. It's let's freaking go. Flip it. Go to the short side on the NASDAQ and the Russell if you want to make some money today and tomorrow. Let's go punch that bully in the face. All right.